What's going on, guys? Today we have a very special video. I'm really excited about this video because this is a stock that I've talked about before on the channel, and we talked about at basically the perfect time. And it's crazy. I'm not going to take credit for the timing of this, but basically we posted a video on December 1st about this stock. And if we look at this chart, December 1st, this was almost the bottom of Activision Blizzard. So today in this video, we're gonna do an update video on Activision Blizzard and what's going on with the stock. So I hope you guys enjoy the video. If you do, make sure you drop a like down below. And if you wanna see more videos like this one, make sure you hit the sub button. So as I mentioned in the intro, we posted a video back on December 1st, and the video was titled Activision Blizzard Stock Analysis. And in that video, we called out a price target of $90 to $97, and the $97 price target was based off Activision Blizzard's previous forward PE, which was around a 26, and the 90 price target was actually based off EA, which is a big competitor of Activision Blizzard, and their forward PE, and kind of how it's trended over time. So looking back at that now, there's recently been news that we're going to get into in this video of basically the stock lining up just in that range, almost to perfection, of $95. So what we've seen since then, like I said, that we posted that video on December 1st, and since then the stock has gone up. And even before this news, we saw the stock even go up to $67. So that was $10 right there alone, that this stock basically went up almost a 20% return. And then recently in the last few days, there's been huge news. And if you haven't heard about it, we'll get into it here in a second. But I just want to point out that this is basically insane. I'm not taking any credit for this. This is just lucky timing, basically, is what it comes down to. But it's amazing that kind of how these things have played out and the timing that's kind of been associated with it. So next, we're going to get into kind of what's transpired in the last couple days that's led to this huge run up. We've seen in the last 5 days 25% run up, this huge spike right here. So let's get into the news real quick. So here's what's caused the stock to run up so much. Microsoft is acquiring Activision Blizzard in an all-cash deal valued at $68.7 billion. So this is a massive, absolutely massive deal that's going through. Microsoft is basically going to purchase Activision Blizzard all cash for $68.7 billion. And what that equates to is $95 per share. This is huge right here. The $95 per share, that's massive. And we're going to get into why in a second. But basically this means that Microsoft is going to buy out all the shareholders of Activision Blizzard. So if you don't know, Activision Blizzard, they produce games like Warcraft, Diablo, Overwatch, Call of Duty, and Candy Crush. So personally, I've played Call of Duty. I play it quite often. I enjoy the game. I think it's a great game. They have Warzone that they've kind of came out with. They have a large kind of trend of good games. And overall, I think there is a little bit of turnaround needed there. The series has kind of gone a little bit more dry, but they have other major series here. World of Warcraft, that's a huge game as well. Diablo has a lot of good ratings. Overwatch has a very good competitive scene. And then Candy Crush is one of the most popular mobile games, basically in all the mobile market. So here's another kind of important tidbit in here, and that is that this deal is expected to close in fiscal year 2023. So not in 2022, but once they go through all the regulation hurdles, all the kind of approval from different organizations, basically stating, okay, is this forming a monopoly? Are there other things going on? Is this deal right? Basically, the biggest thing that they look at is there still a competitive marketplace within the market? So is Microsoft gaining too much leverage over the gaming industry or anything like that? Personally, I don't see that as being a big issue. If you do, then it's probably a good idea to avoid purchasing Activision Blizzard right now at its stock price. But we'll get into, again, in a little bit, how you can still capitalize on this run up from Activision Blizzard. So the last thing I wanted to point out here is basically it's a quote from the CEO of Microsoft. So he's saying, gaming is the most dynamic and exciting category in entertainment across all platforms today, and will play a key role in the development of the meta platforms. So basically, right, the chairman and CEO of Microsoft is saying that this is a move to help them gain exposure to basically the metaverse, and basically be able to develop games that are going to have a large impact on how people live their lives in the future, right? The metaverse, and you're seeing all these videos and people talking about how they're purchasing land within the metaverse. People are buying NFTs that are translatable into metaverse kind of characters and things. Basically, that's kind of the next big wave. And it seems like Microsoft is using this acquisition as a way to gain exposure to that potential coming marketplace of the metaverse. So Microsoft has kind of always had a little bit of a hand in gaming, with obviously the Xbox 360 and whatnot throughout the years. But I think this takes them to a new level. Like I mentioned earlier, you have a lot of a huge competitive scene that is growing in Overwatch and Call of Duty. And that esports scene is basically bringing in millions and millions and millions of dollars every year. And this will be huge kind of into the future, right? Gaming, I think, is kind of the next frontier for almost athletes and sports, because you'll have a lot of televised kind of events. You've seen it in Fortnite is another big example, and those things bring in a ton of viewership and thus bring in a ton of advertising dollars and a ton of money. So I think there's still a lot of potential with this, and basically I think this is huge for not only for Activision Blizzard, but also for Microsoft and all the gaming industry in general. The only thing that I worry about that could be a question mark is, are they going to convert all of these games like Call of Duty, Overwatch, Diablo, are they going to make them Xbox exclusives, right? If that's the case, you could see Sony make some sort of acquisition here soon to kind of combat Microsoft and them moving forward. But Microsoft overall, compared to Sony, they're just leaps and bounds ahead. So it's crazy. If I do anything, I would put money in Microsoft over Sony. So anyways, let's jump into now how you can kind of capitalize on all of this and make a little bit of money based off this news. So as we just talked about, right, there's a price target, or basically Microsoft is going to buy out all of the shares of Activision Blizzard at $95 a share. And what that means is right now we're sitting at a price of $82.15. So there's clearly a discrepancy there. So what we need to talk about first is, why is there this discrepancy, right? If they're going to buy, Microsoft is going to buy the shares at $95, why would the stock price not be at 95, right? Because there's right, it seems like there's a no risk situation. So the risk that comes in, and the reason that things are priced this way, part of it is market sentiment, right? Right now, you're seeing the NASDAQ is basically tanking down. You're seeing 2% downward moves. This is obviously a technology stock, as well as Microsoft is a technology stock. So you have a market sentiment right now that is negative towards basically all of tech. So that is one factor. I would say that's kind of a smaller factor, but it does factor into what we're going to talk about here next. And that is the fact that, right, this deal has to inevitably end up being approved. Right, so it has to be approved, and again, going back to what I was talking about earlier, it has to be approved by a board that says, right, the formation of these two companies combining together does not form a monopoly. You've kind of seen some similar things with Facebook. They've kind of gone through similar discussions. Facebook, most notably, when they did purchase Instagram. There was a lot of talks of, okay, are they forming a monopoly on the social media market? You've also kind of seen it throughout the years with AT&T. AT&T has been a big player where they often acquire a lot of businesses, like you saw with like Time Warner and some of their other acquisitions. And through doing that, right, they expose themselves a lot to basically being regulated, being looked at and saying, okay, are you forming a monopoly by combining too many businesses together? So personally, I don't think that is a huge risk with these two companies, right? I think Microsoft, there's other gaming industries out there, right? You have EA, you have Sony, you have Tencent is another huge game manufacturer. You have all these companies that have a large range of games that are all played. So it's not like Microsoft is buying out a few of these players and there aren't other competitors in the market, right? There's other competitors that are going to basically keep producing games and keep developing games and kind of competing against Microsoft and Activision Blizzard. So I don't see that being a huge factor. So right, the other risk that you have is, right, is market sentiment gonna drive the stock any lower, is really the question. And I don't see that happening, because at the end of the day, right, we're in a situation that it is almost max fear around a lot of these stocks. The only thing that hasn't been exposed to fear in the market are the major large cap stocks like Apple, Microsoft, Amazon, Google. But even those stocks have seen rundowns of like 5 to 10%. So it's just like kind of the market is being held together, and there isn't a lot of catalysts actually driving things down. I mean, you have interest rates. I think the market is basically just pricing those in. I don't want to go into all that too much, but basically I don't see how that affects this deal. I mean, the other huge factor that is a positive towards this is an all cash offer. So Microsoft, it's not like Microsoft has to borrow money and it has other hurdles. They're offering all cash to buy out all these shares. And basically, right, there's no hurdles of loans, lending, whatever it may be. So there's really not a whole lot of risk that I'm seeing in this. The one issue that I have is, right, if this deal doesn't go through till 2023, let's say if it's the back half of 2023, what I have here is you would be getting a 15% return based off these two price targets. So if the deal doesn't happen until the end of 2023, you're basically going to have 2 years, right? You're going to have all of 2022, and then you're going to have all of 2023. And you will only make a 15% return. So, right, if you cut that in half, you're making around a 7.5 to 8% return, basically. So that's okay, right? That's not terrible, especially if the market does trade sideways or go down, then that's a fairly decent return, right, for a slow market. But if the market, right, if the S&P 500 goes up 20% this year or 15% this year, right, it doesn't make sense to park your money in an Activision Blizzard, right? It could be very safe. It probably is very safe, and I feel like it's very safe. But if you have a lot of faith that the market is going to go up a ton in this year or next year, then it doesn't make a whole lot of sense to put your money in this. If you have a lot of faith that the market is going to go down or trade sideways, then of course I would say this is probably a good place to park your money and just make it a easy 15%, 8% basically over 2 years. So that's kind of my opinion on things. Obviously this isn't financial advice. Think through the options, kind of make your own decision and figure out where you feel comfortable. Maybe you still don't like it, but ultimately kind of my plan, I think, is what I'm thinking is I purchased back around that December 1st date. That's kind of when I started adding shares. And what I'm thinking right now is if it kind of goes up to like the $90 mark, I'll probably sell out of my position and then basically move my money over to Microsoft, because I think that gets you the exposure, keeps exposure to kind of Activision Blizzard and the gaming industry. But I do think over time, right, Microsoft is going to have a higher return than me trying to hold out for the last $5 in stock price. So overall, that's kind of my plan. You guys obviously kind of think through it, figure out what you're comfortable with. If you want to take on more risk, less risk, whatever it may be, obviously make your own decisions. But I appreciate you listening to this video and watching this video. If you did like the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Thanks.